Good morning and a warm welcome to all of you. It's been more than a year and a half since we launched the Power of Local Currency campaign in Chisinau. And back then, we promised to roll it out to the region and stay close to you, our partners and teams on the ground. We would have loved to see you all in person, but unfortunately, the pandemic made us change the course and the format. Yet, I still made it to Kiev, as there is no better feeling than being with the team on the ground and, of course, experiencing the extraordinary Ukrainian hospitality. Now, to our host of today, Andrei Stoler, an investment manager at Finance in Motion, highly dedicated and committed to push forward the local currency finance agenda in Ukraine and beyond. Hi, Andrei.
Hi, Oksana.
Extremely happy to see you and be with you today.
Thank you very much. Thank you. It's also our pleasure to be here with you today and with our partners. And I'm really glad you managed to come to Kiev for this on this occasion. And for us, it's just very timely to have this event and to share with us the results of our joint effort with our partners. So to recap, EFSE started lending in local currency in Ukraine since 2015. As you all remember, at that time we still had quite deep crisis, and there were very few who was ready to support. The FX market were quite regulated, and there were no good instruments for providing local currency at that point of time. Yet we stayed determined, and we found a workable solution to provide local currency financing to our partners. We remained also open-minded and brought some other opportunities to the market. Like in 2017, EFSE was the first external lender who hedged hryvnia risk with TCX, the dedicated currency exchange fund that helps us and other lenders and investors to hedge foreign currency risks in emerging markets. So in short, the EFSE's DNA is to support when there is a need. So only in 2015, EFSE provided a 15 million euro equivalent of a local currency in Ukraine through a solution-driven approach. This became possible thanks to extraordinary support from our donor, the German Federal Ministry for Economic Cooperation and Development, BMZ, which provided a dedicated FX risk absorption capital to the fund. This has been further followed by quite generous contribution from the European Union through the EU for Business initiative. Since then, it has been truly a successful journey where we cumulatively disbursed around 170 million euro equivalent in local currency in 25 loans to 7 partners. Importantly, 70% of this funding has been in local currency. It allowed our partners to successfully leverage on this dedicated funding and provide so much needed support to EFSE target group, rural SMEs, agricultural producers, thus achieving high development impact by enabling access to finance, securing jobs, and food security. Such support remains very relevant these days during the pandemic. Therefore, we stay committed, and in this role, EFSE is quite a unique player on the market, whereas our investments, current investments, are pretty much all in local currency.
Quite an engaging trend. Thank you, Andrei. And happy to see that lending in local currency is becoming gradually the mainstream in Ukraine. And we trust that jointly with our partners, we do make a difference. And in this regard, Ukraine stands out at the regional and the funds level. With almost 64 million euro in total portfolio, Ukraine ranks third in the European Eastern Neighbourhood Region and eighth among the 16 EFSE countries. Importantly, as mentioned also by Andrei, the EFSE portfolio in Ukraine is almost entirely denominated in local currency and almost exclusively dedicated to rural and agricultural finance. This is the value and the impact the EFSE is bringing to the country and its people. While we remain optimistic about the country's prospects and our investment opportunities, there are, of course, many uncertainties ahead of us, but at least one certainty is that local currency matters and contributes to the financial, business, and economic stability and resilience. It takes a team's effort to get there, and we can deliver on our mission and make sure that we do real things for real people and get the help that is needed down to the ground floor, the micro and small enterprises, and build financial health for them and their families, thanks to the extraordinary and continuous support of the EFSE caring investors, and namely the European Union and the German Federal Ministry for Economic Cooperation and Development. We are highly delighted to have today with us Mrs. Yulda Kelite from European Commission. Yulda is the team leader of the Social, Economic and Fiscal Reforms and Decentralization of the Support Group for Ukraine at DG NEAR. Dear Yulda, a very warm welcome, and the floor is yours.
Thank you very much, dear Oksana. Thank you for this invitation to this event. And I'm very, very happy to welcome all of you to this event on local currency in Ukraine from the European Commission in Brussels. We, DG NEAR, as you said, and especially support group for Ukraine, which is a unique structure for a partner country outside the European Union, really appreciate close cooperation with EFSE, Finance in Motion, and the KfW in Ukraine. As Andrei already mentioned, the EU contribution is actually integrated in the Global EU for Business initiative. In the Eastern Partnership region, we are committed to strengthening the economy of our partners and provide targeted support to small and medium and micro enterprises. So local currency to financial sector will serve business in their own local currency and contribute to sustainable growth, both at institutional and individual level. Let me just recall that in Ukraine, actually, we as EU are providing support to some 4,300 SMEs and help access to finance and knowledge and access to the market and help to sustain jobs. We are particularly glad that EFSE is one of the partners who is able to reach out to the micro and small segments of the economy in Ukraine. This is really very, very important for us, and as well in politically vulnerable areas in the east of Ukraine. Just let me recall that EFSE is a world largest finance fund for micro, small, and medium enterprises. That's an excellent example of successful private and public partnership. And I'm very happy that we as EU are key partners in supporting SMEs in the region and Ukraine. Thanks to the EU contribution of some 70 million of equity investment in EFSE, we are helping, the companies and the banks, to develop financing in Ukraine and other Eastern Partnership countries. There's a robust mechanism for both investors and the investees to protect from currency fluctuations, and it helps to promote and foster EU's mission for economic development and creating jobs. I would also like to recall our swift and very successful joint reaction to the COVID pandemic, as we agreed to provide additional support of some 15 million in C shares last December, to help the SMEs in Ukraine to face challenges during the COVID crisis. The objective of this specific support is to provide forbearance, of upcoming payments via strategically important 7 Ukrainian local banks. And I'm very happy that, the bank portfolio that, with whom you as EFSE work in Ukraine is growing stronger. This will also provide short-term liquidity or long-term funding for strategically relevant banks to on-lend in local currency to micro, small, and medium enterprises. As both colleagues already mentioned before, I think Ukraine is a very unique market in this sense, because local currency indeed plays a very important role, unlike in probably some other countries which are more dollarized or euroized. Let me say a few words about this local currency liquidity at affordable rates, because this is the key need of micro, small, and medium enterprises that suffer from shortages in local currency. So the EU has been supporting the local currency provision mostly via the hedging against the currency risk, via equity investments with currency risk cushions, and providing guarantees to help to help the effects of de-risking local currency loans. We are also very happy that the EU was helping in the partner countries to provide local currency, and over half of the EU blended finance operations actually are provided in local currency. It's much more in Ukraine, as you were mentioning, but across the partner countries, it's about a half. And we also see that some 40% of the instruments that support local currency are via the guarantees. We also currently engage with our partners in pioneering the work how to use EU guarantees to enable currency hedging, and this involves also further developing of the local bond markets, leveraging of institutional investors for the local currency finance which is needed, and I'm very happy that we as EU also support the development of the banking and non-banking sector in Ukraine, and the reforms they are doing. It is key, as I just mentioned, to link the investment into local currency also with policy reforms, to identify and help partners to address the bottlenecks in the regulatory frameworks, supervision. We work together with governments, regulators, and market participants to remove them. And I'm very happy to also tell that yesterday I was participating in an event organized by the Central Bank of Ukraine on national consumer protection and literacy campaign. So I think this is also a very important aspect to connect the currency provision and the financing with real reforms and educating also consumers and companies. We also, just to say that, we also try together with other IFIs in the neighborhood east to improve business climate. And we work with the World Bank on financial markets, with the IMF on economic governance, and EBRD on a broader business climate issues. So thank you very much, and I wish you a very good event. Thank you very much.
Thank you very much, Hilda, for joining and addressing us today. And of course, special thanks for the continuous and very generous support that the European Union is providing to EFSE for Ukraine to build a stronger, more inclusive and more sustainable financial sector for the country and its people's prosperity. Highly appreciated. Now, I have the great honor to welcome Dr. Klaus Müller, the new chairman of the EFSE board, to share his vision on the role of EFSE and the importance of local currency finance to drive sustainability and impact for businesses and economies. Dear chairman, a warm welcome. Highly delighted to have you here with us today. The floor is yours.
Thank you, Oksana, and also Andrei for the kind introduction. And also thank you very much, Hilda, for the welcome address, and in particular also the appreciation of the work of EFSE. We really feel privileged and honored that the EU is giving so much trust to the work of EFSE. Then really a good morning and warm welcome to all participants of this event on local currency for local success. Certainly also new in this position. I had loved to travel to Ukraine and to be there personally, but I think we also appreciate that it's possible to organize this kind of events in a virtual environment. I certainly also don't want to forget to give a special welcome to the representatives of the national banks of the region. There is the first Deputy Governor, Vladimir Mutenau, from the National Bank of Moldova. There is the Deputy Governor, Akil Meshverishvili, from the National Bank of Georgia, and certainly also the Deputy Governor, Dmitry Sologup, from our host country, from the National Bank of Ukraine. And having just mentioned also the EU, I'm just coming also from a meeting with the EU Commission in Brussels, where we also discussed about EFSE and the achievements of EFSE in the region. And I think indeed it's great to see also how my colleagues from EFSE do this wonderful job in the region. As I said, I'm new in this position. I'm working for KfW, the German Development Bank. I'm there the director for Southeast Asia, for the Department of Southeast Europe. And in this position, I have also taken over the position as chairperson of EFSE. And certainly you might wonder that it's a particular time I'm taking over this position, a time when the economies are really troubled by the impact of the corona pandemic. Also a time when especially small business are particularly facing challenges due to the economic consequences of corona. But I am particularly eager and I'm particularly honored to be part of an institution now and also of a community that is particularly equipped to support small enterprises and hopefully also to provide a positive perspective for partner banks and small business in this crisis. All of us who are joining this event today are part of the infrastructure on which hardworking entrepreneurs rely on for resources and support. That is true for the financial institutions where loan officers very often have to drive long distances to provide personalized services to their clients. That's true for the central bank representatives which have a particular challenge to steer the economies through the current storm. And I'm extremely grateful to see all this dedication, commitment to the sustainable development agenda. And I'm really happy that we have this esteemed audience today to support this agenda. Certainly, and you already mentioned that the power of local currency is really a major driver of sustainable economic development, sustainable development in the financial sector. Entrepreneurs rely on that they can finance their business using the same currency in which they also make their income. That allows them to responsibly plan their business, to have less worries for their future. It protects their cash flow against currency fluctuations. It allows more reliable planning and in the end allows to grow more securely and to continue operation and in the end also to contribute to overall growth and economic health. All this is the power of local currency. And as was already mentioned, for EFSE, support to local currency has been a priority for many years now. And in addition to the hedging possibilities you might have in the market, but which are sometimes very limited to certain currency. The EFSE has the big advantage to have this special layer of shares, which we call the L shares, to do internal hedging. And this is indeed possible due to the generous contributions of the German government, the German Federal Ministry for Economic Cooperation, and the contribution of the European Union. And it was already mentioned, this important initiative, EU for Business, and I think this really put wind into the sails also of the local currency financing of EFSE in countries like the Ukraine. But before I close, let me shortly turn also to our host country today, to Ukraine. Ukraine occupies a very special place in the EFSE family of countries. It's a very large, it's a very dynamic market, and currently EFSE has invested about 65 million euro into Ukraine. This is over 70% of the EFSE portfolio and actually also with a growing trend. And I have to say, I already have been presented some of the support we are doing here in Ukraine, and I was impressed by the really particular commitment and the shared vision of our partners here, of our partner banks here in the Ukraine in promoting sustainable entrepreneurship. In the last 12 months alone, Our partner banks here have on lent 715 tailor-made loans to small business and households. 90% of this was in local currency, and I think 90% shows really what kind of impact we can make. We are all together here to explore and to discuss how we can best make impact, especially in this challenging times. And I want to extend again my special thanks to our local partner lending institutions, also to the National Bank of Ukraine. All of you have been pushing very strongly forward to this valuable agenda of local currency financing. I'm very eager to hear your insights, your questions, your contribution. And let's always remind us, if we work together, we can make a big difference. Thank you.
Thank you very much for being with us today, Dr. Müller, and we truly hope to welcome you in Kiev sometime. And thank you for these inspiring words. We can only reiterate the fact how jointly with our partners and the regulator we can achieve big impact. And on this note, let me invite Oleg Chury, ex-deputy governor of the National Bank of Ukraine, who was pushing forward the regulator's reform agenda, including in liberalization of FX market. And who, if not Oleg, can give valuable insights into the topic of local currency financing. So please welcome Oleg Chury. Just a quick before we engage into interesting discussion with Oleg, a quick announcement. Also today we have interactive event. We would like to make it a bit more engaging, and therefore we invite you, encourage everyone to share your thoughts or questions through the dedicated Slido platform, which you should see in the interface of our event. And afterwards, in the Q&A session, we will be able to take your questions and discuss them or address to our speakers. So, Oleg, we just re-emphasized how important is for an investor like EFSE to foster financing in local currency. And we would be happy to hear the local perspective. In your view, why it makes sense to prioritize local currency in general and for lending in particular?
Good morning, everybody. I would like to thank you, European Fund for Eastern Europe. I would like to thank Financial Motion and also Andriy and Oksana for inviting me for this event. Answering on your question about why we should use local currency, in our case, hryvnia, I would like maybe to see this from macro and from micro level. If you're talking about micro level, so for Ukrainian borrower, for Ukrainian corporates, of course, it's much more beneficial to borrow in local currency. In this case, you would avoid FX risk, and it is a really perfect hedge if you have proceeds received in local currency. Of course, it's perfect hedge to borrow also in local currency. There are also a number of reasons why it is becoming more attractive. We see that due to accommodative policy of central bank, interest rates for local currency dropped quite considerably. Now we are having a key rate of central bank of 6%. This is historically low rate, and it's not only the lowest rate ever in Ukrainian history, it's also the rate at which banks can effectively borrow from central bank, unlike in previous years where borrowing from central bank was quite difficult. But talking about borrowing in local currency, I saw a latest statistic from central bank for the last quarter, and actually the cost, the price of loans for corporates dropped also quite sizably. It's now 9.2%, so again, historically low. So there is a clear incentive for the companies to borrow in local currency. If you are looking, for example, from the perspective of lenders, of course, for them also it's much more beneficial to provide loans in local currency. Of course, you might have a balanced open currency position, but if you provide foreign currency loan to local borrowers who do not have enough proceeds in foreign currency, then you are exposed to FX risks. And now it is much more beneficial to lend in local currency, both from risk perspective, but also from regulatory perspective. Because if you provide loans in foreign currency to the company without enough local currency proceeds, then you have to allocate much higher share of capital for such loans. If you are looking at this issue from a macro perspective, of course, it is much more beneficial for the whole country to have much higher share of financing in local currency. Lending actually is a very important channel for monetary policy transmission. That's why when we have much higher share of local currency, monetary policy of central bank is much more effective. And if monetary policy is effective, it's much more easier for central bank to receive its targets for low and also stable inflation. If you're talking about exchange rate now, so there is a certain link between exchange rate and inflation, the so-called pass-through. The higher level of dollarization, the higher level of pass-through, and the less effective monetary policy of central bank. That's why central bank is very much interested to have higher level of financing in local currency. We can also look at this issue from financial stability point of view. Ukraine moved from fixed exchange rate policy to floating exchange rate policy. And theoretically, exchange rate should play the role as a shock absorber. But if you have higher volume, higher level of foreign currency financing within the country, then basically it's quite a big risk that the exchange rate would not play the role as shock absorber, but rather the role of shock amplifier. So it might high level of foreign currency financing within the country might create problem for the whole industries, and in effect it might create problems also for banking system. It might affect financial stability. But talking about financing in foreign currency, of course, there are certain advantages having receiving loans in foreign currency as well. It's no doubt about this. So you might receive maybe financing in lower nominal rate. You might receive financing in much longer maturity. Actually, if you are able to borrow from Eurobond market, actually it's the biggest and the most liquid market where you can borrow. But again, trying to weigh what is the more beneficial for the companies and for the country, of course, financing in local currency is much more beneficial and much more attractive now.
Thank you, Oleg. So if we conclude it rightly, local currency shall be rather a question of necessity than a question of choice. How do you assess the overall level of dollarization in Ukraine? And does the central bank have any specific targets in this respect?
Actually, level of dollarization in Ukraine is high, but frankly, it's not excessive. The reason for high level of dollarization is probably You can list these episodes of macro-financial instability before we had quite big issues with fragile financial system. There are a number of reasons why we have this high level of dollarization. This is a high level of informal economy, tax avoidance, etc. Dollarization in particular takes the form of asset and liability substitution by foreign currency. In Ukraine, in our case, assets and liabilities for local banks in foreign currency, for example, for deposits, it's about 40%, and for loans to corporates, it's also about 40%. It's not too high level, but it's still quite substantial. By the way, National Bank of Ukraine, after crisis in 2007 year, actually completely prohibited loans to individuals in foreign currency. So these loans are now provided exclusively in local currency. That's why share of loans to individuals in foreign currency is quite low. It's basically its legacy portfolio. It's about, I think, 3 or 5% at the moment. If you compare level of dollarization with other countries, for example, in Georgia, level of dollarization of deposits and loans is about 50 and 60%. If you look maybe to other extreme cases, for example, in countries who actually adopted foreign currency as their local currency, like Ecuador, for example. So the level of dollarization is 100%. But what it means? It means that the higher level of dollarization, the more you are exposed to monetary policy of other central bank, in our case, to monetary policy of Federal Reserves, and also to currency fluctuations. We in National Bank of Ukraine defined the level of dollarization which would be more preferential for us, and we think that this level of dollarization is about 20%. Why we do still need to have some dollarization? Just because Ukraine is a small but open economy. We have quite substantial share of export-import transactions in relation to GDP. That's why some level of dollarization still need to have. And in this case, we would receive more benefits from this level. But again, this level should be much lower than we have now. Maybe if you look at another issues regarding dollarization, so I think inability of government to borrow in a local currency, so-called original sin, is the biggest area of vulnerability for public financing. Presently, in the debt of public debt of Ukraine nominated in foreign currency and foreign currency indexed instruments, about 70%. It's quite high level, and it's create some risks for financial stability. Of course, large share of foreign currency financing received by Ministry of Finance, by government, are actually concessional financing at quite a low rate. But still, this is foreign currency, and you are exposed to FX risk.
Thank you. We all know that good results are achieved when people come together, when people work together. And in this respect, collaboration and coordination is key. What does the National Bank of Ukraine and maybe other public authorities do to promote the use of local currency? And even more than that, what would be your recommendations to the local financial institutions and to the external lenders, like, for example, EFSE, to do to support this process and these efforts?
Oh, it's a big issue. We can talk about this for quite a long time. But talking about using of local currency, or in another way, talking about de-dollarization, because this is actually the same thing. So I would say that's the key to promote de-dollarization is to address the issues why we had dollarization in first place. And I think the main task is to conduct policies which would support macroeconomic stability, which would support low and stable inflation. It's a lot of issues about policy. For example, policy regarding exchange rate. I believe that exchange rate have to fluctuate. We have to have floating exchange rate, and there should be two-way risks. So foreign currency shouldn't be considered as a safe asset. It means that hryvnia have to fluctuate in both ways, in terms of weakening, but also in terms of strengthening. So it is crucial, especially when interest rates in local currency decreased quite substantial, and now we have the lowest probably interest rate differential between local currency and between foreign currency. It means to have a local currency attractive, you need to have flexible exchange rate. Talking about, I would like to talk maybe a lot about why it is important to use local currency, and I think the policies should be aimed to preserve kind of monopoly status of local currency of hryvnia for domestic pricing of goods and services, for its monopoly status as a means of payments within the country. So it should remain in place. If you are talking about, for example, financial stability and issues regarding local currency. As I mentioned before, there was decision to completely prohibit using local currency to provide loans to individuals, and I think this prohibition should remain in place. In this case, you would avoid risk to financial stability while providing loans to individuals who do not have proceeds in foreign currency. And actually, that was one of the reasons of that crisis at the mortgage market we had more than 10 years ago. I would also like to talk about maybe specific measures or instruments which regulators, which government bodies and central bank in particular have to use to promote using local currency. For example, last year, central bank completely changed the way calculation compulsory reserve requirements for banks' liabilities, and now for local currencies, this is zero compulsory reserve requirements, but still we have some requirements for foreign currency. During pandemic, central bank also introduced a lot of instruments to support economy, but in the end, it's also all about promotion of using local currency. So all refinancing facilities in local currency were changed in a way that short-term facilities tenor of short-term facilities were increased by 3 months. But also central bank introduced long-term facilities in local currency for up to 5 years. And presently, the only requirement to receive such refinancing facility is to have sufficient collateral, and basically Ukrainian banks, they have enough collateral to borrow from central bank. And we see from statistics that borrowing from central bank refinancing facility increased drastically. Now it's about 70 billion hryvnias, which banks channeled to provide loans, to make investments, and also to support government in situation of pandemic. Central bank also introduced quite innovative and unorthodox instruments. Last year, I'm talking about introduction of interest rate swaps. So these are basically first interest rate derivative which were launched in Ukrainian market. So these derivatives has tenor of up to 5 years, and the banks use these facilities in order to cover their interest rate exposure. As of today, the volume of such facilities is about 17 billion hryvnias. And on top of supporting financing in local currency, these facilities play very important role of promoting new benchmark EONIA, because this facility is linked to EONIA. It is calculated using EONIA, and also it plays very important role for promoting derivatives in Ukraine. These products are very new for the market, and these facilities now is used by I think about 16 banks. So it's a very important educational exercise. Talking about financial liberalization, National Bank of Ukraine actually supported approving law on currency, which was came into force in the beginning of 2019. Via adopting this law, central bank managed to liberalize a lot of current account capital operations of Ukrainian residents. But via adopting such law, central bank also managed to liberalize a lot of hedging instruments, which are quite important for supporting local currency. I'm talking about different instruments like FX swaps, FX forwards, non-deliverable forwards. These instruments are already available at the market, and basically there are almost no restrictions for using these instruments. And we observe that volume of these instruments are growing quite rapidly. For example, last year in comparison with previous year, volume of FX hedging instruments increased by 100%. And last year they amounted to about $3.5 billion. FX forwards, which is about probably 2% of GDP. It's still quite low by international standards, but the dynamics is really very positive. If you are talking about what other government institutions need to promote local currency, I would mention two very crucial areas. First is developing of equity market. And second, about development of pension reform. Regarding equity market, now we are having almost ground zero. Basically, there is no equity market in Ukraine. So it's, but it's really a very good opportunity to develop this market. Why it is important? Because when central bank started liberalizing FX market, now it's quite easy for population and for corporates to invest abroad. If they don't have enough investment opportunities locally, of course we would see the trend that more and more volumes would go abroad, which in the end, in the long term, might have kind of impact on financial stability. That's why it's very crucial to have developed equity market. Some people are telling that we are emerging market and maybe we can live without equity market. But if you look at other emerging markets, so they have quite developed market. For example, Pakistan, they have live and liquid equity market, and I don't see the reason why Ukraine cannot follow this suit. Talking about pension reform, so second pillar of pension reform means it's compulsory pension reform, but it would promote long-term financing, since people would keep their pension savings into private funds, and they can actually, this would stimulate private funds to match their assets and liabilities, so they would have loan liabilities. That's why they would be able to provide long-term financing for Ukrainian economy. This would also be very crucial for promoting using local currency. What my advice for institutions like European Fund for Southern East Europe, and maybe for other IFIs, but also for Ukrainian banks. So now I see a lot of opportunities for developing new products. Basically, after market liberalization, you can use different products like hedging products, not only FX hedging products, but also interest rate hedging products. But my view is that market participants, final borrowers, Ukrainian corporates, they really have not much understanding how to use these products, what benefits they can receive, what kind of risk they can hedge. And I think the task for international financial institutions, of course, for central bank and for local banks as well, to educate their clients about how to use these products and how and actually promoting these products for Ukrainian economy. There are a lot of opportunities now. Actually, coming back to central bank, to new products which was launched last year, there is one interesting product, FX swap, which we first launched in partners with EBRD, and now EBRD are able to borrow funds from central bank at 6%, which is quite cheap. And I know that some other IFIs, they're in the process of signing agreements with central bank to receive such facility. Of course, this would drastically change situation whereby IFIs would be able to provide more loans in local currency, so it's much better hedging than they used to have before. Summarizing all this, I think there are a lot of opportunities at the market, and the main task is to use these opportunities to promote local currency.
Yeah. Thank you, Oleg. Very well said. On a bit different topic, the biggest challenge that a responsible lender like EFSE is facing on the markets is the pricing. In your view, is there a working and reliable benchmark that you would recommend in that respect? You already mentioned about Ionia, that's the rate was introduced recently by the National Bank. In your opinion, is it something to be considered? Is it trusted and can be relied upon by external lenders?
First of all, I have to say that it's like a global trend to have new benchmarks. As you know, by the end of this year, LIBOR have to cease to exist. So, and all financial institutions in the world, they are busy preparing for this event. So we are talking about, I think, $350 trillion of instruments like bonds, derivatives, loans, which are linked to LIBOR. And the main criticism for LIBOR, why this benchmark have to be replaced by other benchmark, is that it cannot be considered reliable and robust anymore. We all know the cases of how market was, how this benchmark was manipulated. On top of that, these benchmarks, I mean term benchmarks, so they're based not on actual deals, but on the expert opinion of market participants. That's why there was an idea to replace LIBOR by another benchmark, which is called, we called risk-free rate. So there are already such benchmark operating abroad. So we can mention, I can mention like SONIA SOFR in US and in UK it's euro short-term rate. So this all these benchmarks are actually risk-free rate, and there is an absolutely different philosophy in calculating these benchmarks. First of all, these are overnight rate. What it means? It means that you would have much less credit risk. You do not have liquidity premium because there would be no benchmarks for longer term than overnight. And this benchmark is based on very liquid overnight market, a very liquid underlying market. I see some problems, of course, with new benchmark because it would be there is no possibility to calculate in advance ex ante what would be the payment in the future. For example, if you link this benchmark, for example, for 3 months, it means that only after 3 months you can calculate what you have to pay based on compounding overnight rate. But on the other hand, there are some advantages, and this rate wouldn't be that volatile, because this would be a kind of compounding overnight rate. So it's not like the previous benchmark when you take a rate on the certain date. So what it means for Ukraine, basically. In Ukraine, we, central bank, are not staying apart. We also introduced overnight risk-free rate, UONIA. So we did this in mid of last year. So we try to basically replicate the way such rates are calculated, administered, and monitored. So we we introduced a UONIA rate, which is based on overnight interbank transactions. So these are not surveys; these are actual deals based on which this rate is calculated. National Bank of Ukraine tried to make this rate reliable and acceptable by the market. That's why there is a hard job done to get this rate compliance with EOSCO principle. So it is planned that this rate would be fully compliant with EOSCO principle. I hope next year, because there are still a lot of things done in this area. But I have to say that National Bank of Ukraine already done a lot. For example, in April, I think, last year, oversight committee was created, and this committee consists of participants not only from central bank but also from the market. So, and the purpose of this committee to monitor how this rate calculated, to provide advices, and basically to help central bank to administer this rate. And I think after this reform, we would in the end have quite reliable, and the only question is probably timing, because market sometimes in Ukraine things goes not very fast, and it would probably take time for market participants to accept this rate. Maybe I would also say a few words about other benchmarks which we have in Ukraine. So, namely, we are having this Ukrainian deposit rate (URD), which was quite widely used by the banks. And but there are some drawbacks for this rate. First of all, this rate are done based on survey, so it's not actual deals. Second, this rate are done based on rates at which banks attract deposits. It means these rates have some liquidity premium. It has some credit risk. But more to that, it would be almost impossible to use this rate for interest rate derivatives. So it's usually only interbank rates which are used and for such purposes. And I think Ionia is the best candidate to use such rate for derivatives. And actually, one of the purposes for launching interest rate swaps by central bank is to promote using Ionia rate. Now we have roughly 16 or 17 billion hryvnias linked to this rate. In this way, I think the best case to promote something is to do something. And actually, that's what exactly central bank is doing.
Oleg, thank you very much for these views and perspectives. And we actually wanted to pause on this topic. I can say that in our operations in local currency in Ukraine, we usually spend a lot of time and energy on discussing pricing reference rates with our partners. And just recently, we discussed it with Raiffeisen Bank Aval, and I know we have Victoria Masna with us. Victoria is head of investment banking at Raiffeisen Bank Aval, and I would like, hello, Victoria. So if you don't mind, could you please share your take on the Ionia? Do you see it as a good benchmark? Hello, Victoria, do you hear us?
Hi, Andrei. Hope you can hear me well.
Yes, we can hear you. Thank you. Did you hear my question?
Yes, well, I would love to. First of all, thank you so much for inviting us to be part of this wonderful event. We very much value our cooperation and our long-term relationship with your institution. We, of course, very much, yes. Yes.
Mm-hmm.
I'm sorry, there seems to be some problem with the connection. Can you hear me now?
We hear you now. We hear you, Victoria.
Well, I hope there is some lag in time, so I hope you can hear me now better. So I would like to follow up on what Oleg has said, and the National Bank of Ukraine has definitely been the new entity which has changed the banking market in Ukraine. And basically, we very much value how they have contributed to developing new instruments and how they have helped us to basically change this totally different banking system, a totally different approach in the creating a new banking attitude and understanding of how products work in the market. Rightfully so, these rates have to be reliable, they have to be transparent, and then it can have a big trust from the system. And this is something definitely which we would expect that Lithuania can get in some period of time. Unfortunately, we are not there yet. I think what we're lacking right now is historic performance of this benchmark. And what we are lacking now also is the understanding of all banking system community and also the customers. So I think what is very important that it's based on the actual transactions which have been completed by the participants. What is important though is that currently it is mostly just used for the swaps calculation. So basically it is used for those transactions which banks complete with the national bank. And again, we are the lucky of these swap facilities, IRS swaps. And this is actually helping us for the first time in Ukrainian history, more or less.
Thank you, Victoria. And
is working pretty well is a short-term lending. For those purposes, you can have the rate, and this rate could be easily matched on the assets and liability side. On the other side, obviously, there is the long-term lending, which we still need to get to. So Ukraine is still more or less not doing much of mortgages, not doing much of car loans. And for that, you need a long-term benchmark, and you need a proper understanding on the customer side of what the reset is and how reset is calculated. And what is very important is predictability or some kind of, low volatility of that rate. Because if you're talking about mortgage, for instance, and if you use this mortgage product, then what we see is that the customer, after 5 years in the mortgage, realizes that their payments have gone up significantly. And this is something definitely we need to avoid. So I think we have seen Kyiv Prime fail, unfortunately. And basically what we have to make sure that we join our forces together with market participants and National Bank and external stakeholders is that this rate does not fail. This is first thing. And second thing, that with more stability, predictability on macro side, this rate will become more reliable, more predictable, and then could be potentially used for long-term lending. I think what we see firstly, the start, of course, would be on the corporate side, because these are more professional players. And this is also what we see when we talk about derivatives. Yeah, we are actively selling it to our customers. We still have to teach some of them what that is, what forward is, but we are getting there. And next thing would be, of course, teaching our customers how to apply this rate, where you can get this rate, what this rate represents. This is the next step. And I think we will also, being one of the large banks, we will take a big role into educating our customers. I think what we have to do is basically create an understanding of a benchmark, because for many years you would see a fixed rate both on assets and liability side. So if we do introduce it on the asset side, then we have to somehow also reflect it on liability side. So customers can understand that this is a fair game, that we are not just cheating them on one side and then benefiting on another, which, customers tend to think sometimes. I think in general, our banking system has changed into becoming a totally different animal, compared to what it was 10 years ago. It's now the whole banking community, and now also financial institutions community, which National Bank has taken over, will play a big part into making this country more educated financially, introducing new products, and making more literate decisions by our customers when they go into long-term financing. And long-term financing is something we need for this country. Yeah, there is a lot of structural things which need to be financed, and they cannot just be financed by 1 month facilities. We need to kickstart the market of long-term loans for our customers. And due to the fact that now rates on the historically low level compared to any other period in modern history of Ukraine, we have this chance of trying it again with the mortgage loans. I think majority of banks forgot what it is, including both for retail and for corporate. Yeah, so there's been very little of investment loans, true investment loans of this market, and we need to see that happen. And of course, while we still don't have the rate, kind of facilities which you guys doing are enormously important, because that allows banks to match their assets and liabilities on maturity side, and that is definitely something which banks need to do their proper risk management.
Thank you very much, Victoria. Indeed, pricing, along with with the stability, is extremely important dimensions. But equally important is the environment. These days, we live in a highly competitive world where financial institutions are actually expected to offer already today what their customers might need tomorrow. And in this regard, I think we, and here I mean EFSE and also its existing and prospective partners, have a common goal: to offer better products and services to all, and to create prosperity. So in the end, we all can be winners if we can act fastly and we can act responsibly. And speaking about the winners, I would like to kindly invite Taras Proț, the Chief Financial Officer of OTP Bank, to share with us his thoughts about what are the market instruments that can best support the financial institution to promote the use of local currency.
First of all, I would like to thank Oksana and Andriy for organizing this event, EFSE Fund and esteemed European partners for continuously promoting funding in local currency, and last but not least, to be invited for this event. I believe that the key words that I will address today will be that approach has to be differentiated. The first point, which I mean under differentiation, is the fact that approach has to be different for various partner banks. If one looks on overall liquidity in local currency, which is available on the market, sorry, do you hear me?
Yes, we do. We hear you very well, Taras.
Because I had a feeling. Because I had a feeling that connection was lost. So if one looks on overall liquidity position in Ukrainian hryvnia on the market, we see that there is available Ukrainian liquidity in the amount of ISS to be 100 to 150 billion of Ukrainian hryvnia. Definitely, it still remains the issue of Ukrainian economy and banking sector that this liquidity is very concentrated, and we speak about 10 to 12 banks which accumulate the most of this liquidity. Fortunately, the representation of these banks gets wider. It's no longer just Western banks, but there are already state banks, there are private Ukrainian banks, but still many of them are Western banks. That's why I believe that for this segment, this specific segment, availability of funding in Ukrainian hryvnia is not as urgent issue as credit risk, which we undertake by lending to corporate, micro, and small and medium-sized enterprises. That's why my belief is that for this specific segment, the specific instrument should not necessarily be funded participation. For the rest of the banking system, it still remains true. But for top Ukrainian banks, for biggest Ukrainian banks, which already accumulated significant Ukrainian liquidity, the push has to be via unfunded risk participations. Based on quarterly assessments, which National Bank does, we see that gradually, quarter after quarter, banks are slightly relaxing their credit standards. We see that what dominates within feedback provided by banks is that credit standards and approval standards will not change significantly, but there is increasing trend for a slight improvement. So whenever we have partners whom we can share credit risk, it really helps to speed up adjusting of our risk appetite, our standards, and this kind of instruments will be beneficial for us to utilize this liquidity and for overall economy by clients by receiving this liquidity faster whenever we have this instrument. Naturally, the question about this liquidity stance will be that it's not longer term, so why should it be still unfunded risk participation? But I believe that based on our estimates, we still do not have the data series for net stable funding ratio. But what we see from our bank and what we believe from those banks which have Ukrainian hryvnia liquidity, the ratio will be 120 to 140%, which still allows room for longer-term lending. The nature of funding which banks have, naturally, when we speak about corporate segments, to less extent with retail, but in retail it's still present in the form of current and saving account. But with regard of corporate, it's mostly current accounts. But we have data series throughout three crises, year 2008 and 9, then 14 and 15, and very recent Corona crisis, which proves that even throughout crisis, there is very high stickiness ratio of these current accounts. It's 70 to 80%, which definitely when we speak about 10 to 12 year or 15-year horizon, it's not enough. But currently what is prevailing on the market in terms of longer term funding is 3 to 5 years for that period. That funding which is available with banks is of stable nature. And it can be indeed used for longer term lending. And those margins, net interest margins, which we still have at the markets, they allow to accommodate even interest rate risk behind. Last but not least, as already mentioned by Oleg Churi, definitely there are already available instruments from central bank which can address funding, longer-term funding, and which can address interest rate risk embedded into longer-term funding via interest rate swaps. That's why I believe that banks are fully fledged and have enough of liquidity in order to allow themselves to go for longer-term funding with their own liquidity power, but what will be very much appreciated will be unfunded risk participation from funds like EFSE and IFIs and other European partners, to speed up the process of making lending accessible primarily for micro and small and medium-sized enterprises. The other point of differentiation is the integral element of funding. What I mean is that based on our own experience in participating in local currency funding programs, and especially that of our leasing company, we see that whenever there is a grant element embedded into the program, which usually takes form of discount or cashback, which the final consumer, the client of the bank, can benefit, then the take-up speed of this funding and utilization of this funding is the fastest. naturally, this kind of elements can be restricted to climate change driven grants and funding, because then you have physical assets on which you can have a cashback. This CO2 emission saving can be quantified, it can be monetized and packed as a discount, but these elements, they indeed help to make another boost for the spreads and for widening of lending. With regard of other segments, when we are not speaking just about climate change elements, but accessibility and access of certain segments, certain client segments to funding, which for most of the development economies they are restricted to. I mean primarily small and medium-sized enterprises. The integral element, which is most appreciated by Ukrainian banks, is technical assistance, which can be part of longer-term funding. And here, I especially mean micro segment, because with small and medium-sized enterprises, banks already over a number of years learn how to operate. Usually, as a benchmark, you can take corporate process and adjust it to the peculiarities of medium-sized enterprises. But micro segments is usually mix of even more of retail rather than corporate, but still has some elements of corporate. And many banks indeed do not have experience, have not worked with this segment. That's why technical assistance was best in breed and best market practices from other developing economies of structuring products and processes within the bank for lending to these segments will be indeed very much appreciated and will create value for funding instruments which can be available via these funds.
Thank you very much, Taras, for joining us today and sharing your insights, and looking very much forward to welcoming your bank to the EFSE family soon.
Much appreciated.
Thank you, Taras. And there is one more question we want to address to our audience, to our partners. When it comes to key sources of local currency funding, in the current Ukrainian realities, where do banks can mobilize hryvnia with adequate pricing, adequate tenors for lending? To take this question, I would like to invite Alexey Shklyaruk from Agro-Prosperis Bank. Hello, Alexey.
Hello, Andrei. Thank you for this question. It's a really good one. And first of all, I would also add that the local currency is becoming more crucial with coming years, just because in our loan portfolio, we also see this trend for increasing share of local currency, and with all this decreasing spread between dollar funding and hryvnia funding. So clients, they are also asking more and more local currency, and this is a really crucial question for us. In terms of sources where we can find local currency at the moment to fund our loan portfolio growth, so a part of the classical capital and deposits, we have also this NBU refinancing, which is now have this long-term option available, as Mr. Churi said, and basically loans in local currency from international financial institutions. Basically here, if we are talking about the market on the high-level basis, we don't see some very significant issues here, because basically the market is over liquid. We have very big surplus of liquidity in banking sector. But if we dig deeper here, so basically this surplus of liquidity is mainly basically in over last 2 years, the total loan portfolio of Ukrainian banks decreased on $6 billion. So basically, it really correlates with this surplus that we have at the moment and that we see at the moment, and which is temporarily invested by the banks in state debt and NBU's certificates of deposits. And also, as if we dig deeper also on this question, so as Taras also already said, that this liquidity is really concentrated in state banks and a few foreign subsidiaries of foreign banks, and basically the instruments of redistribution this liquidity in among Ukrainian banks, it's they really doesn't work, because as also Mr. Fried said, we don't have equity market and we don't have like proper long-term interbank loans available for the moment. So basically, if, for example, today the bank will decide increase loan portfolio for 20-30%, so basically the deposit option will be quite expensive, just because it requires sharp increase of funding and basically affect the profitability. And NBU refinance, it's also complicated option just because it's mainly cash covered, and basically this nature is not about development. It's not about like significant increase of investment in Ukrainian economy by the banks. It's mainly about balancing and like shifting the money from state debt to the economy itself, and supporting also the government. So basically here the most option here, the most available and the best option we have, for example, at the moment, this is loans from international finance institutions in local currency, just because we have here the adequate pricing and significant tenors, and basically with this approach to like analyzing the business model of the bank, to analyzing the operations of the partner, so and availability to provide these loans without hard collateral. So basically, it's really the most significant option to like develop the business and to invest, to increase significantly the investment in Ukrainian economy. For example, not that banks which are really concentrate the liquidity in Ukrainian market. So I believe that in once Ukrainian economy will recover from pandemic, so this liquidity surplus will come back to the loan portfolio, and the issue of funding the further growth to the boosting the Ukrainian economy, it will be again on the table. So here's loans in local currency from IFIs will be much appreciated and will be playing a crucial role in boosting Ukrainian economic growth.
Thanks a lot, Alexei. Well noted. And now let's move on to our short Q&A session. We did have received several questions from the audience, so thank you for being proactive sending us those. Looking at the questions, it looks like they will be probably addressed to Oleg. And yeah, maybe let's start with the first one, which is looking at the dollarization level dynamics. In what time frame do you think Ukraine will achieve its target of 25%, if understood correctly?
Thanks for question. Actually, target is 20%. The problem is that nobody can tell what is the time frame for achieving this level of dollarization. The problem is that experience from
Oleg, can you unmute?
Yeah. Should I repeat? Yeah, okay. So the situation is if we analyze the dollarization efforts by other countries, by the experience of other countries, it's not like a short-term solution. It's not like a short-term project. It's like long-term efforts to do these things done. And we have a lot of cases in other emerging countries where dollarization remains very persistent, even when the macroeconomic situation stabilized, when you have low and stable inflation. So these are problems which we will have for a number of years. And the best receipt to address this problem is to continue conduct proper policy for macro-financial stability, for low and stable inflation, for flexible exchange rate, but also to improve financial market, to strengthen government institutions. So it needs to be done, its efforts both by government institutions and market. And the best thing we have to do is just to continue doing what we are doing now. We will have results, but this is not short-term solution, unfortunately.
Yeah, indeed. Thank you. As I said, there are two more questions here, and I would also like to send the second question to you, Oleg. There is interest in the hedging facility with the NBU. Do you find that acceptable that the regulator takes the currency risk? And regarding the interest rate of 6%, is it fixed or is it pegged to policy rate? Is it basically fluctuating?
Coming from last question, the question probably is about this long-term facility, and this is floating. It's linked to NBU policy rate. Regarding your question regarding NBU taking currency risk, but NBU already taken kind of currency risk because NBU provides facilities against collateral, including foreign currency, and of course NBU takes kind of currency risk. For example, these transactions, these FX swaps, which NBU now has with EBRD and also probably with soon with other IFIs, it's also about currency risk. But I would view a situation on NBU taking, probably the question was about NBU taking active roles in promoting FX hedging instruments. I would see the role of NBU is rather to promote these instruments via legislation, to promote these instruments via education. But I don't think, frankly, that NBU should directly participate in FX hedging instruments. So it would be there are a lot of questions for regulator. I'm not now with regulator anymore. You probably need to address to this question to NBU. But there are only a few cases for emerging markets when central bank took direct role in market transactions with hedging instruments. What I can tell you is that from my point of view, to develop hedging instruments, NBU also should allow to link offshore market with local market. In this case, we would be able to have Ukrainian banking system and Ukrainian corporates in the end would be able to access to possibilities to hedge their exposure offshore. And this would be a very bold and crucial step, but of course this step needs to be analyzed quite roughly, because of course this link would create some hedging possibility, but of course there may be some risks regarding speculation. But in the end, I strongly believe that Ukraine have to move to liberalization and to integration into world financial market. That's the only way, and I think non-residents in particular would also play the role in the end into developing this market and into educating this market how to operate certain instruments.
Mm-hmm. Thank you. And the last question we have relates to the tenors in the local FX forward market. What are those? And do you know if cross-currency swaps are also common on the market?
So the tenors of FX hedging instruments, namely FX forwards, both deliverable and non-deliverable, are still quite short. Short one, it's about 1 month average tenor. But with the market development, actually this tenor is increasing. So dynamic is really very positive. So we are seeing increasing in volumes of FX hedging. We are seeing positive development in understanding of market participants about these instruments, and we also see positive signs that the tenors of these hedging instruments are also increasing.
Thanks a lot, Oleg, and once again, thank the audience for sending us your questions. I think on this note, we are now wrapping up. That's, my fault, sorry. Yeah, thanks a lot once again, Oleg, and thanks audience for sending your questions to us. And I believe on this note, we can now wrap up our today's discussion on the power of local currency. I think everybody will agree on the importance of this topic. As highlighted, we had record pipeline in recent years, including in Ukraine, and we are aiming even higher. So, we are glad to see hryvnia becomes the currency of choice for lending, and together with our donors, we stay here to support. So let's give credit to our local currency and believe in hryvnia. Thank you very much. It was a pleasure to be with you today.
Yeah, as Andrei put it very nicely just now, we do trust in hryvnia, and of course, we do trust in all the currencies of the EFSE region. It is actually the local currency that keeps us connected these days. And from our side, we definitely remain committed to advance the local currency finance agenda in the EFSE region. And we strongly believe that we could achieve high if we act now. Therefore, we would like to already now kindly invite you to our next event in the Power of Local Currency series, which will be held in Tbilisi, Georgia, and hopefully will be a physical one should the circumstances allow for it. Thank you very much for joining us today, for engaging with us and following us. Wishing you all lots of health and see you soon.
Thank you.
Thank you.
The power of local currency financing. For growth and prosperity, financing in local currency matters. It is responsible, sustainable, and healthy. It shields micro and small enterprises as well as low-income households from direct exposure to foreign currency risks and contributes to the overall stability and resilience in the European Eastern Neighbourhood Region. Because when businesses and households can borrow in local currency, they can invest in their future without worrying about the ups and downs in the exchange rate. That is where the European Fund for Southeast Europe comes in. EFSE has created a dedicated local currency facility to promote lending in local currency in the European Eastern Neighbourhood Region. This was enabled by generous contributions from the European Union under its EU for Business initiative, as well as the German Federal Ministry for Economic Cooperation and Development. For nearly 15 years, EFSE has been a market enabler, facilitator, safeguard, and innovator for fostering economic development and prosperity. In this role, EFSE has been tirelessly committed to promoting financing in local currency to make a difference and change the life of people, businesses, and financial institutions. Now, with the dedicated support from the European Union, which is committed to building strong economies by nourishing the roots of employment and growth, EFSE can push forward the development frontiers. We are focused, we are determined, and we are committed. And from where we sit, we want to make sure we get wins in the region and positively impact the lives of millions of people, financing in local currency, because it matters and we care.